billion for payments to individuals. And according to what I've read, people are getting that. In fact, people who qualify for the $600 per person or $1,200 per couple, most of them, I think, according to what I read this morning, have received those by direct deposit. Also in there is $120 billion to supplement the unemployment. That's $300 a week up until March the 14th, which means that somebody in New Jersey could get over $1,000 a month in unemployment, because the maximum benefit in New Jersey is $731. So you add 300 to it, and you're talking about over $1,000 a week for unemployment to many people, which is going to be a big help to those that are unemployed. And I think for some of you, as we knew from the first time around, that additional federal stimulus is also putting some of these workers in a position to get paid more than they were when they were working, which has posed some difficulty in getting some people back to work. But that's a different issue for a different time. Also in this package is money for emergency rental assistance. There's some money in there for infrastructure funding, some money for schools and colleges to support what they're doing to control the virus. There's money in there for food assistance, childcare, and a bunch of other things. But the biggest pieces are for the business PPP, the stimulus package to individuals, and the unemployment piece. And there are many other parts of the stimulus package that are very detailed that probably wouldn't apply to this conversation. But for this, from the standpoint of this stimulus package versus the first, there are many new eligibility requirements, which I think are very important for all of you to know from the standpoint of small business, the small business community. One of the biggest issues is in the prior PPP, the maximum loan amount was $10 million. This time, the maximum loan amount is $2 million, which should open up more companies' availability to access the funds they apply for. But the mitigant to that is that there are organizations that were not eligible the first time around with PPP that are this time, probably the most important of which are 501c6 organizations, which are all the chambers in the country, all the chambers of commerce. So that opens up a whole new avenue of access for those companies. So there should be more companies applying for similar dollars to the first time, but the fact that the maximum has been lowered will free up more dollars for those people who are accessing it. People can also access the PPP a second time. If you receive money the first time around, you can get it a second time if you adhere to a couple of criteria, one of which is that you will have had to use all the money in the first PPP before you get any second round money. And secondly, and probably most importantly, you have to document that your gross receipts in 2020 versus 2019 were 25% lower. And that can be for any quarter compared to 19. So any quarter of 20 versus the like quarter of 19, if you had a 25% reduction in your gross revenues, you could qualify for a second round of PPP, just like you qualified for the first time around. As with the first go around, sole proprietors, independent contractors, self-employed people are all eligible. So a lot of that is similar, but in my estimation, this program for the business community is a little more user friendly. It should have a wider reach. I believe after they finally come out with the applications, which should be today or tomorrow, the ability to apply will be simpler. And I think the most important thing for any of you who went through the first go around, which was a very steep learning curve for the applicants and also the banks, because let's not forget that you get the application from the SBA, but you have to fill out that application and give it to a bank who then approves the loan and funds the loan. And the banks had a very steep learning curve and had to go through hoops to operationally get set up to do this. And most of the banks in New Jersey did a very, very fine job. I know there's some banks on the line here, and they're to be commended for the job they did of ramping up and getting these loans out the first time. So the process for the banks, they should have it already in place, which hopefully will make it easier for companies to access these funds in this second PPP go around. So let me just go through some of the notes that I took. We had a conference call yesterday with the SBA, the U.S. Chamber of Commerce, and I took some notes from that, which were their highlights of this new stimulus package, basically the PPP portion. And I'm just going to go over the notes I took, and they're not in any specific order. They're kind of the way it was outlined yesterday. But I think in total, there'll be probably some thought-provoking things that you might want to ask when we get to the Q&A session. So let me just hop right into this. And again, this all relates to impacts on the business community through the PPP or related type issues. And I'll talk about those related type issues in a minute. Again, the maximum loan you can apply for is $2 million. As with the first go around, you calculate that by taking the average monthly payroll for the last year and multiplying that by 2.5, and that gives you the maximum loan amount you are allowed to apply for. Now, the payroll definition is a little more expansive than just wages. It does include insurance. It does include the employer payroll tax number. There are a number of things that can be added to the actual employee wages to come up with that payroll number. But it is 2 point times that number, and that is the maximum you can receive. And again, that's up to $2 million. Except for anybody in the hospitality business, which are restaurants, bars, and people like that, they can apply for 3.5 times average payroll because they have probably been one of the most, if not the most, impacted industries in the country. So they get a little bit of additional stimulus there by going to 3.5 times their average payroll. The second draw, if you have received a first draw, as I said before, you can apply for a second draw. And again, the criteria is you have to have 300 or fewer employees. You have to have a 25% reduction in gross receipts any quarter in 20 versus the same quarter in 19. And you will have had to exhaust and utilize all the money in the first PPP loan you got before you can get anything in the second round. So if you qualify under those criteria, you can apply for a second PPP loan. Now, one thing that's in it, and I'll get back to the PPP loans in a minute, but one thing that's also very, very important for you all to know as businesses that is available in this new program is something called an employee retention tax credit, which allows you to get a credit against your payroll taxes or a refund if the number is greater than you're paying. And it's a number that is eligible for the first 2 quarters of 2021. And it's a number that is $14,000 per employee. It's $7,000 a quarter for 2 quarters. So you can get, if you have 6 employees, or let's say 10 employees, you can be eligible for a $140,000 employee retention tax credit. And that's a significant amount of money. There are some things you have to do to qualify for that. And the guidance given from the U.S. Chamber was you should probably go to whoever prepares your taxes and work with them on that number. But it's a gift, and it should not be ignored. And it's something that you should definitely take advantage of. And the beauty of this is you can get a PPP loan plus the employee retention tax credit in this second go around of PPP. The first time around, they were mutually exclusive. This time around, you can get both. So it's something not to be dismissed, because it can be very beneficial to you, and provide significant dollars and significant enhancements to your cash flow. Um, Another important change and clarification for the first go around of PPP and this go around of PPP is that any monies you have received through the PPP program are not taxable income. There's still a debate as to how this will be shown on companies' P&Ls, but the monies you received they're not considered taxable income. And on top of that, the expenses that you have paid for with the PPP money are fully deductible for tax purposes. So it's kind of a huge gift in the fact that you're not being charged taxes on the income or the receipt of the money, but you're allowed to take deductions to your income by the expenses that you've incurred by using this money. It's a huge, huge shift. And again, that plus the employee retention tax credit can yield a lot of money to companies that participate in this. Now, the loans that are made, as you probably all know, are made on a forgivable basis. And the way forgiveness is determined is that you have the payroll costs that you have applied for. You can add to that other expense categories to the expenses that you're incurring. You can apply for forgiveness based on expenses used to buy PPE for your company. If you've had a software cost to supplement what you're doing internally to make sure you comply with PP or the COVID requirements. If you modified the interior of your businesses with plexiglass or new barriers or whatever, that's all deductible. There are many things that are deductible that were not deductible in the first go around. So what the process is here is that after you have spent all the money, you then apply for loan forgiveness. And by the way, you have between 8 and 24 weeks to spend the money. So you don't have to do it. The last go around, you had to do it in 8 weeks. This time you have up to 24 weeks to spend the money. So when you go for loan forgiveness, you list the expenses that you have incurred, which are the payroll expenses and the additional expenses I just outlined. And if they equal the money you received, then you should be getting full forgiveness of the loan. The only catch is that 60% of that total has to be the payroll number. And if you don't have enough funds to cover what you applied for and received, then you fall into the category of having to pay back that balance in a loan over, I believe it's 5 years at 1% interest. So even if you don't have it totally forgiven, the penalty is a 1% loan paid back over 5 years, which hopefully would not be a huge detriment to your cash flow. Now, the other thing about loan forgiveness with the first go around, anybody who received a PPP loan the first go around, the forgiveness is very simple. It's going to be a one-page document that you fill out, and it's going to be probably an automatic forgiveness if your first time borrowing for PPP was $150,000 or less. If you had more than 150, there are other requirements for forgiveness, but the first go around, they've made that additional enhancement. That will probably hold true for this next go around also. So if you're applying for less than 150,000 this time, you can probably be assured that that will be forgiven as long as they stick with that one-page forgiveness document, which I've heard they will. So the beauty of this also is that there's another loan grant program from the SBA that maybe some of you have accessed. It's called an EIDL loan, EIDL, Economic Injury Disaster Loan. Those loans are available through the SBA. They're more traditional loans. They carry an interest rate of 2.75%, but they're 30-year loans. So again, cash flow is minimized. The pressure on cash flow is minimized because of the low interest and the long-term payout. Those loans, again, you apply for directly from the SBA as opposed to the PPP loans where you would go to the banks to apply. But before you apply for an EDL, an EIDL loan, you can ask for a $10,000 grant before you apply for that. And those are grants. Those are $10,000 payments that the SBA will give companies for having interest in EIDL loans. I know many companies expressed interest in the EIDL loans, got the grants, and never followed through on the EIDL loans, but they got to keep the grants. That EIDL loan program has been extended through December 31st, 2021. So if you have interest in that, you go to the SBA. So far, the three things that you need to think about are, if you're thinking of applying for a PPP loan, you go to your bank. If you're thinking about accessing the employee tax retention credit, go to your tax preparer or your accountant to help you with that. And if you're thinking about going for an EIDL loan, you go to the SBA and they can give you guidance. And again, since this is the second time around for all these, the process should be a lot easier and a lot less complicated and should expedite your access to those funds. Now, as far as the PPP program, again, as I said, nonprofits, 501c6s, of which my organization and the Greater Toms River Chamber, I'm sure Danielle is a 501c6. For the first time, those organizations are now eligible for these PPP loans, which, I think probably Danielle has been telling all of you as members the stress that chambers have been under because, we've had to provide the services we always do, but with limited funding from members and events and having no access to PPP the first time. Now we are eligible for those funds, which should ease the pressure and hopefully allow organizations who've had to let some people go to bring them back to provide a better service to their members. So that's a good news piece of this act. And my organization, working with the U.S. Chamber and other state organizations around the country, lobbied extremely hard to get that in there. And we were fortunate that it did make the final cut. It was something that was debated right up till the end, but it got in, and that's going to be a big plus for the chamber industry and other 501c6 organizations. One thing of note that I would caution all of you on or encourage all of you to do is this new PPP program is available until March 31st or until the money runs out. And based on the pain that's out there in the overall business community in the country and the fact that every state is sharing in this, I would highly encourage you to get on top of this early. If you haven't already contacted your bank, if you have an interest in a PPP loan, you should contact your bank to make sure they are going to participate and make sure that they know you have an interest and make sure that they know that as soon as you access the application and fill it out, that you're going to be going to them for assistance. The applications are not done yet. The modifications of the first PPP loan application, as I said, that should be done any day. And as soon as that's done, it'll be posted on the SBA website. We will be sending out a notice to all of our members and the people involved in our Chamber Alliance, of which Danielle is a member, and letting them know when those forms will be available. And I would encourage you to make sure you queue up your bank that you're going to be doing this. Make sure you realize, you understand your bank will be participating, and then understand that as soon as you get that application, fill it out and get it in, because the money is probably going to go fairly quickly, according to the indications we have received from the U.S. Chamber. As I said, also just some additional things on the PPP. Independent contractors are eligible. There's a very big, I don't know if Danielle, any of your members or anybody on the phone is in the live venue business, which are theaters, comedy clubs, whatever those live venue facilities are. There's a separate program for live venue organizations in this, and it is a separate pool of money where these organizations are eligible for a grant, not a loan, a grant up to $10 million or 45% of the gross revenue that they received in 2019. And those organizations only have to prove that they've had a 25% reduction in their gross revenue, and they are going to be eligible for this. But again, if you are a live venue operator, this is a grant program that's available to you through the SBA. Don't go to your bank, go directly to the SBA. That's where this is available. And again, it's up to $10 million or 45% of your gross receipts from 2019. And it could be a very big bailout for that industry, which along with restaurants has been very severely impacted. And again, this program, you have between 8 and 24 weeks to spend the money and apply for forgiveness. And that's an extension of 16 weeks from the initial 8 weeks the first time around. So it's a much more generous program. You have more time to spend the money you have received and still be available for forgiveness on this. What else? I might just touch on, there's been a lot of question and concern about what PPP was supposed to have done. What was the reason for PPP? And the original intent of the PPP loans was to have the money available to businesses so they could pay their employees, keep them on the payroll, or bring people back on the payroll during the pandemic, and not have the companies have to let a lot of people go and really impact our economy. Great intent. And the original program was you had to do this in the first 8 weeks, because back at the outset of the COVID, people thought this was a short-term event to be cured very quickly. And obviously it was not. And a lot of people went through their PPP loans in the 8-week period. And now it's 6 months later and they haven't gotten anything since then. But the intent of the first go around the PPP loans and this go around is the same: to keep people employed, to keep people on the payroll, to bring people back. And that's something that's hopefully going to be continued with people who receive these loans. But that was the intent. And I don't think in practicality, a lot of the monies that were given out the first go around were used strictly, adhered strictly to that concept. But nobody's keeping score. The money's available, and as long as it keeps companies survive, as long as it allows companies to survive, I think that probably is the bottom line of this, and that's that's been, I know the first go around of money has been very helpful, but I think this go around will be even more helpful to many businesses who continue to suffer. So let me just go through one more page of notes here before I open it up to questions. One sidebar, any entity with significant ties to China is not eligible for PPP, which kind of states the obvious, I guess, with our relationship with China. Okay, we covered the loan forgiveness. Let me just go over it quickly. The loan forgiveness, the expenses that can be applied to a loan forgiveness are the payroll costs I talked about, rent and interest expense, utility costs, operational costs, PPE costs, any corrections you've had to make to your physical facility. They are all now applicable to apply against the overall amount of money you got to apply for forgiveness. So that has been expanded pretty dramatically. Again, the deadline is March 31st or until the funds are gone. Oh, group insurance, it can be included. When you're calculating the 2.5 times payroll, you can include your group insurance payments in that calculation. Let's see, what else? The employee tax retention tax credit I told you about is eligible. You're eligible for that until June the 30th. PPP runs out March 31st. The employee retention tax credit is available until June the 30th. And that's a pretty wide information dump, but I think covers all the high points and the points I think that all of you should know about. I would again say that having gone through the first round of PPP and analyzing it and helping people try to get access to it, this go around should be a lot easier. They've made it much more user friendly. They've expanded a lot of the categories. The ability to get the tax credits and the PPP is a plus, and also the ability to have the income not taxable, but the expenses tax deductible is a huge plus. So I just make sure you understand all the benefits of this because there are very significant cash flow implications, positive cash flow implications to business if you go for all these different aspects. And again, none of these are mutually exclusive. You can go for all of them, including the $10,000 EIDL loan grant. So Danielle, should I stop there and open it up for questions?
Sure. I think Phil's going to facilitate the Q&A.
I'm going to facilitate. Tom, thank you very much. That was fantastic. You covered a lot in a very short period of time. Take a long drink. And also, I would say that on the call with us today also is Mike Eggington of a long time. I saw a celebration a couple of years ago of his 25 years at the chamber. I don't even know if that was today. It feels like 10 years ago. So I'm not sure if that's 35 now, but I'm sure it's more than 25 as the executive vice president of the chamber in charge of government relations. So Mike, if there's anything you want to chime in when we go through this Q&A, please do so.
Thanks, Phil.
Yep. Let's one clarification just to make sure, and this is actually not a joke. It clearly does state you can't do business with China, but Russia's okay, right?
Yeah, it's the only country named here is China.
I joke, but not really joking. Start off, there's a bunch of questions floating around. Some have been answered, but the one just to make sure very clear, if you've finished spending the PPP money from the first go around, but you haven't completed your forgiveness yet, it is only a one-page form that eventually is going to come out. Do you need to complete that before you go for the PPP number 2?
No, Phil, it's only, you have to have spent the first go around. You don't have to have any of that money forgiven. Or you don't even have to have applied for forgiveness. It strictly states that you have to have spent the first tranche of PPP money. Has nothing to do with forgiveness.
Perfect. I know this question's been asked a couple times, and I think we're all getting somewhat creative, but if you know the answer, it'd probably work out very well. When we talk about quarters, in normal situations, we talk about the first quarter as January to March, second quarter, April to June. So first part of the question is, can you make any 3 months you want equal a quarter, or does it have to be first quarter, second quarter, third quarter, fourth quarter, as we normally state them to be?
Quarter for what purpose, Phil?
When you look at your 25% reduction in a quarter.
Oh, yeah, no, it has to be,
2019.
no, I think it's a traditional 3-month quarter compared to the same traditional 3-month quarter in 2019.
Yeah. We're creative business owners, so sometimes we look out of the box a little. And I know for me, and I haven't seen this addressed anywhere on that same topic, the pandemic started technically in March with all the executive orders and the government shutdowns and everything like that, maybe the end of February, beginning of March. But you can go to January 1st, 2019 to March 31st and have a complete first quarter 2019 comparison to complete 2020 first quarter. It doesn't start when the pandemic starts.
Right, exactly. For those calculations.
Yep, just making sure. Now, I don't think you mentioned it, but it kind of works in. There was the original one, you had to have started your business by a specific date in 2019. Does that carry forward to the PPP number 2?
Yeah, I think the first PPP said you had to have been in business by February of 2019.
Right.
I haven't seen anything that contradicts that. So, I mean, you have to be an ongoing business. Now, I guess your question is for the second go around, if you started your business in February of 2020, does that make a difference? I haven't seen anything like that. So I would probably say that it still is the February 2019 date.
Okay, so and if you didn't get the PPP money the first time, you still have to meet for this one that 25%.
No,
You
no,
don't?
no.
Okay.
The only the 25% reduction in quarter-over-quarter gross receipts only applies to people going for the second round of PPP. If you are applying for the first time, you're just applying for the first time.
Okay, so that might be something that we may want to look into, because if you didn't apply because you weren't in business in 2019, but now you are in business in 2020 and you didn't get the PPP money the first time, you don't have to meet that 25%. So maybe there is an avenue there. We'll have to further look into that and see, because it wasn't stated that you had to be in business in 2019.
Right.
So, okay. Are expenses incurred to purchase equipment to offer remote learning eligible expenses?
I believe they are, because the expenses that they're talking about are expenses that you are incurring that you wouldn't have incurred if the COVID didn't happen. So many of those expenses, like you just said, are expenses that you're incurring because you're trying to comply with COVID requirements, or make your facility safer, or whatever. But if the COVID hadn't happened, you probably wouldn't have done that. So that's the intent of those expenses that are eligible.
Okay. Now this is the one that I think has still confused me, and you talked about it and made me feel good about it, but now I'm still confused again. On the EIDL, okay, and this was the one, if I remember correctly, right when this whole PPP EIDL rolled out, every day you were getting 15 to 20 emails. Submit your application to SBA. Submit your application, and everybody was filling out, and everybody was told you're getting 10 grand. Of course, it was based upon number of employees and everything like that. Now, when you're going into forgiveness, and I have a nonprofit that was eligible, got PPP money. When we went into forgiveness, that was not forgiven and has now been converted into a 1% loan. My question is, was that wrong? Is there a difference between when you filled out that SBA application, and it was I thought it was a grant. I'm now seeing it converted into a loan. Is that?
No, it's Phil, that's the 10 million, the $10,000 grant, which is by the way, that's a cumulative. So if you got $2,000 the first time around and you have $8,000 available to you now through the EIDL grant, it's a maximum of $10,000 per company between the first EIDL go around and the second EIDL go around. But those are grants. They have nothing to do with the loan. Unless you've applied for the loan, there's no payback of that. That is a grant.
Okay, I had to go back to the bank. On the live venues, is there any specification on that? Like if you have a question came up, catering halls or.
Yeah.
Are they,
The qualification is that the primary business has to be the entertainment aspect of it. Comedy club, music theater, a theater itself. That the primary occupation has to be the entertainment with the additional add-ons of beverages and food, but that's not the driver. The driver is the entertainment, the live venue piece. And they can have food and beverage, but it can't be what the intent of that company is. It has to be the entertainment piece. So a catering hall, I'm not sure would qualify because that is, it probably falls under the category of the restaurants, but there are many different iterations of this. I do know that the entertainment aspect is what's driving the live venue. But I can see a case for a catering hall because of the size of it versus what the restaurants are allowed to do. But I know that the primary concern intent is the entertainment piece driving that live venue grant opportunity through the SBA.
and to be clear, since the EIDL grant loan program is through the SBA, you could go apply for that today.
Yes.
That's available. And as far as the applications for the PPP, your best bet's contact your bank to find out when it's going to be available.
Yeah, well, the SBA and the Treasury are the people who are modifying the PPP application. And they had 10 days by statute, I guess it's 10 business days to do that. This was signed on the 27th of December. So we have to be approaching 10 business days. And then it will be posted on the SBA website, and that's how you would access it. Take it from the website, fill it out, take it to the bank, and the bank then uses that application to decide whether it's valid and whether the loan will be funded.
Okay. So we should be somewhere near that 10-day period, depending
Yeah,
on
should be very close.
our idea of business day is a lot different than government. So it works out. In your opinion and what you've gotten from the U.S. Chamber, what's bad from this bill for business, from this law?
What's bad?
Is there anything bad? Anything that we're going to be surprised by?
I haven't heard in the first go around of PPP, other than the pain involved with applying and the banks having to really reinvent themselves to accommodate the loan requests. I haven't heard much bad about the first go around. There was in the first go around, there still is in the forgiveness process, any companies that received more than $2 million have to go through an additional certification to show, really to prove that they needed the loan in the first place. That's about the only negative I've heard on the first go around. And that's going to be eliminated in the second go around because you can't borrow more than $2 million in this go around. So I haven't heard of many problems, Phil, but the good news is this is the second time this has happened. So most of the kinks should be out of it. It should ease the process. And there's greater flexibility on the forgiveness piece because of the added expenses you can apply to forgiveness. and there's a longer period of time to spend the money, which will help companies survive. So, it's awful hard for me to determine that there are negatives other than the fact that there's a cap and it could run out and people could apply for a certain amount of money and not get everything they wanted or not get anything. Other than that, it is I think, a very, very good program for business overall.
It's always, I mean, again, you always get a little scared when you hear things are good coming out of Washington and Trenton.
Yep.
So always have to ask that question. On the, again, in the first go around, other than the chambers, there were a lot of nonprofits who could apply and did get PPP money to protect their, whether it's churches and synagogues, whether it's foundations, different things like that, that were all included in there. If you need to go for another round, 25%. Good morning. There's no dogs running around or kids screaming.
No.
But that's the new world we live in. When you're doing 25% reduction on income, okay, most of those organizations' income is donations, contributions. It's not like you're sending bills out to people for services rendered. Has there been any talk or any thought about how those organizations calculate 25% loss of income?
Well, a lot of those organizations, their income is derived, as you said, from donations. Some have members, some hold events to, galas and dinners and things like that. So that's where a lot of these organizations have had very significant revenue fall off. Companies have not donated as much as they've had donated in the past because the companies that were the normal funders of those organizations are impacted financially. And then the biggest thing, as with all the chambers, are the events have been eliminated because you couldn't have events. So again, it's from our standpoint, being a not-for-profit organization like the Greater Toms River Chamber is, it's revenue derived from any of those sources, all of which have been very significantly impacted. So I don't think any nonprofit who got it in the first go around, which would be 501c3s and other 501cs other than the sixes, their calculation is the same as ours, and they have very similar revenue sources, except that a lot of them get funded by grants and we don't, and I don't think the Greater Toms River Chamber. Revenue is revenue, and many of them have been impacted much greater than 25% reduction.
Oh, yeah, completely. And I know I can't imagine somebody who doesn't, get, who hasn't had at least a 25% loss between 2019 and 2020 per quarter, per year, much more than that. Now, question, do you know if American Legion, I don't know the nonprofit status of those, what the number is. Are they included in this new round?
Don't know. I would think so if they're a not-for-profit. I mean, the first, excuse me, go around of the PPP, they put out the SBA put out a list of every company in every state that got a loan through the first program. And in New Jersey, it was 5,500 pages long. And I started to look at some of the people who received these PPP loans, especially the ones that got $5-10 million, and you would be shocked if you saw some of these organizations that received money and how much money they got. And there were some very oddball organizations. It wouldn't be, I wouldn't be surprised if American Legions got them, because I'm sure they have, they hold events, they hold dinners. I know in my area, they have different things they hold in their on their facility. They couldn't hold those events, and that probably significantly impacted their revenue. So I would think they would apply, and they would be eligible. And my guess is many of them got money.
Yeah, I guess, and definitely, I mean, I saw that list too, and I was blown away at some of the dollar values to some of the businesses that I know.
Yep.
But I think the other thing too is, have a conversation with your bank and let somebody tell you no before you don't apply.
Yes, exactly. They are the final arbitrator. And again, the sooner you go to them and let them know, well, first of all, to find out if they're going to participate this go around, that's the important thing. And if they aren't, which I would hope most banks are, then you have to find a bank. And you asked a question about the difficulties, the negatives of this. One of the negatives of this, I know, in the first go around, were companies that had needs but did not have a very strong bank relationship, and they probably didn't get as much attention as the larger customers of that bank would have gotten. And in some cases, I know people didn't get anything because the relationship wasn't that strong, and they were turned down. So that's probably the biggest negative, is the lack of strong banking relationships with some of the applicants in the first round.
Yeah, and I know, it definitely, and the other thing too, now you made a very big point that, this is a limited window, there's limited money. You really want to jump on this as quick as possible.
Yep.
And I know we have some banks on the call right now. And, if I was a bank, I'd be serving my customers first and then whoever else. And so if you don't have that banking relationship, you may lose out a little. Though I do know there were a lot of internet banks that also assisted people in different areas to be able to get that through. So people should really look everywhere to try to get their applications.
And let me just say, Phil, and I was a former banker, and I know I've talked to a lot of banks about this. I think our banks in New Jersey did a very, very fine job of accommodating their customers and the applicants of these loans. And New Jersey fared very well in the first go around of PPP loans. So I think the banks deserve a lot of credit. They didn't get a lot of credit because I think with the banks, if you do that job, people take that for granted, and the only thing you get is criticism if you don't do it. So they're really the accolades to the banking business for the first go around have been few and far between, but they deserve a lot of credit.
Yeah, they worked hard. They got a lot through, and definitely in a short period of time.
Yeah.
You didn't mention it. I just want to clarify. So in the first part, you maintained your employees, you got the money, whether you put your forgiveness in or not, but there was a lag between that money coming through and where we are now. And you may have had to let people go after the fact. You may not be able to sustain them.
Yeah.
In this second application, are you held to, like, if you let people go after your 8 weeks ran out, for your 24 weeks, are you now penalized for that, where you may not be eligible, or you may not be able to get 100% forgiveness?
You can have let people go, but the way the rubber's going to hit the road on that is when you go for forgiveness,
right?
Because again, 60% of what you 60% of what you're asking for forgiveness has to be payroll. So if you've reduced your payroll significantly and you don't meet that bar, it's not going to be forgiven.
Right. But if you did significantly decrease your payroll and that's the first one's gone, when you go to apply for the second one, it's based upon your payroll now. So that change in payroll is not going to affect your second application. Correct?
Yeah.
Okay.
Right.
Just making, it's not like you have to, you may not be able to bring people back, but at least the second time around, maybe you don't get forgiven.
Correct.
I know we have a few minutes left. I think we've gotten to most, if not all, of the questions. I had one other question for you, and I don't know, it was not in the bill. I'm going to butcher this probably. FFCRA, which is the I had to look it up. The Families First Coronavirus Response Act. It was not extended. Again, this is the ability for where people have to get paid if they're out, and there's a tax credit to that. Do you know if there's any talk of that being extended at all?
Way above my pay grade. I have no idea what that is.
Yeah, Mike, do you know about that at all? This was like if people. Yeah, sorry, go Mike.
Sorry, I was going to say no. I'm Tom's the the professor on this stuff, so he doesn't know. The chances of me knowing is thin.
Sorry to ask a question that nobody knew.
By
But
the way, that's with most things.
Phil, can I call a friend?
yes, yes. This was the act that they put forward where people have to get paid if they're out quarantined or sick by coronavirus, and the business gets to take a tax credit off of that, what they get paid for. It doesn't get not out of your sick leave or vacation time and stuff. So I was just wondering, it wasn't extended. I was wondering if there's any talk for that.
Hey, Phil, semi-related to that, the governor signed earlier this week the unemployment insurance payroll tax bill, and it helps extend it out for a number of years, so it's not, hard hit to the employer community. But one of the provisions in there was if you had to lay off people due to COVID-19, you were going to not be penalized for it. Normally you would, and your experience rating would go up and you'd pay more, and you'd be in a farther column, which is a complicated formula at Department of Labor. So I just wanted to mention that's good news for the employer community that happened this week.
I mean, between Tom and Mike, anything else on the New Jersey front that we need to know that is coming out of Trenton as we're in January in an election year?
Tom, you might
Yeah.
want to mention tomorrow what we're doing.
Yeah, tomorrow is the signing of the tax incentive bill that was passed, which I think is a step forward for the state. Also in there is a $50 million grant from the EDA. Just one more grant from the EDA, but at least it's a grant for the business community. And there's some other positive things flowing through the legislature that I think will be helpful to the business community if they're adopted. And I would say for the first time in a long time that we are cautiously optimistic based on the strength of this PPP program. Some of the things going through the legislature right now, the tax incentive plan, the extension of the unemployment thing that Michael just talked about, which eases the burden on the business community. I mean, there's been a lot placed on the business community over the last year, 2, 3 years, but there's now some things out there that are starting to turn a little bit for the positive. And what we're focusing on right now is to take all those seeds of hope and grow them and get some real positive pro-business momentum going in the state. And I think there's more likelihood of that happening right now than there has been since Murphy took office. So let's hope that that's true.
Good to hear. Good to hear. Ralph, do you have anything you want to say in closing, or otherwise?
Yeah, so going back to this FFCRA, and we just had that, took advantage of that in our last pay period. We had a couple of folks out that we paid to be out. They were on COVID quarantine. And basically what it is, it's a payroll tax credit. So what they do is the amount of money that you paid that employee, they reduce your tax burden in that pay period. So it's like a net zero to the company.
Yep.
Okay.
Again, I thank Danielle. I'm going to turn it back to
Yes.
Danielle, but Tom,
Yes.
and Mike, thanks for your time. Back to you, Danielle.
Tom and Mike, thank you so much for always being such a huge support to our local chamber. We could not obviously do this without you, so thank you very much. And I'm sure that we will be in touch with any other questions that we have. Thank you
Danielle,
so much for your time tonight.
please don't hesitate to ask for any clarification on what we talked about. I know I went over a lot very quickly, kind of disjointed, but I think it all, if you sit back and look, it all kind of comes together. Any questions anybody has that we can help them with, we will. A lot of the detail is not finalized yet. Once the application form is done, we'll let you know, and that's the key thing. But if I haven't left a message, this message strong enough, please, anybody who's interested in this should have already gone to their bank, and if not, go today. Let them know you're interested, and as soon as that application is out, fill it out, get it in, and get this process started, because there's no indication of how long the money will last, and the sooner you're on it, the better chance you have of getting what you're applying for.
Awesome. Thank you. And thank you so much for the information that you send out from your chamber that we are able to forward to our chamber members. It is really invaluable information. Thank you so
Great.
much.
Glad to hear that. Thank you.
Danielle, I hope you also get our Trenton Watch that we do. That's in that daily publication. During COVID, we attach it to those daily informational pieces, and always feel free to send that out. It kind of keeps track of the various bills that we're lobbying on in Trenton. And I also want to reiterate what Tom said. It goes both ways. Thank you. And, you know, Phil and I go a long way back of your support, especially through Chambers Alliance. You know, I'm a big believer in having a unified, strong voice from the chamber community and from your chamber along with us, you know, is very helpful. So thank you for your continuing support and helping out there as well.
Thank you. Thank you so much.
And I'd also, if I can say one more thing, for all of our members, non-members, Friday morning, Member Connect this week. You know, not only are we talking about how we can help you on your business, you know, financially, but you got to meet people. You need to network still in this world. And Friday morning is the opportunity to do that. Member Connect. And you don't even have to leave your house to bring your own coffee. So sign up on our website.
Yes.
So on
Thank you
behalf
so
of the
much.
chamber and everyone here, we thank you, Tom. We thank you, Mike, Bill, Danielle. Is really a great update for all of us. And I hope everyone on the call has gotten a lot out of it.
Yes.
So
Okay.
We'll be
Thank you
sending
for
out the
asking.
recording. Thank you. Thanks so much.
Okay, you're welcome. Thank you.
Mike, be well. See you soon.
Thank
New
you.
Year.
Thank you, everybody.